Hey everybody, I'm recording this on Friday night, and I just wanted to kind of take a breath and process the week we just came through, because it was quite a week. In fact, it's been quite a year so far for the Bears in a really awful way, and for the Bulls in a perhaps redemptive way. But what I've done, and first of all, I'm going to try to get over the bizarre and singular guilt I seem to have if I don't generate 12 posts on a weekend, for God's sake. Most people do 0, but you know me, Mr. Content. But I'm going to try to just cool it, because it's really not necessary and it hardly makes any difference. So yeah, it'll just be a little here, a little there. And this video will suffice for most of the day, because I just want to share with you my views on key ETFs and what I think they mean to the market. And I'm going to start off with the two pieces of kind of worst news for the Bears out there, and the best news for the Bulls, which is the breakouts that took place, long anticipated. The Spider famously has been teasing with a trend line, and it managed to, on an intraday basis, sneak above it, as you can see. And this is reflected on the ES as well. But you can see this trend line is anchored to the highest point in history. It tagged it here on March 29. It approached it on August 16 after a 2-month counter trend rally. It got kind of close to it in December, both beginning and middle. And it actually, for the first time ever, sneaked above it during the mayhem on Friday. There was a kind of final 10-minute swoon in the markets, which had it close below it. So it's not exactly cause for hearty celebration among the Bulls just yet, but it did poke through there a bit. I personally would be much more concerned if we got above this 410 level. And I'm just going to become an aluminum siding salesman if we get above this Fibonacci, because at that point it's just like, screw this. But we're down here for now. The other celebration for the Bulls would be the cubes, which there's no poking or sneaking or anything. They are above and closed above the descending trend line, which had this very much the same phenomena in terms of lifetime high, although it was earlier. It was back, I think, in November, and then we approached it and then tagged it here on the 16th of August. Closest we got earlier was December 13, which was a big hard reversal day, but we are for the first time ever above it and closed above it and spent the whole day above it, in fact. So that's, do your dance. There you go. That's the victory portion. As far as the other ETFs, a little more nuanced. Let's just go through these in alphabetical order. Commodities, kind of a fixation of mine, showing a little weakness here, principally thanks to oil. This peaked back on the 23rd, and today being Friday, was the decently weak day, and giving us the prospect of working our way lower. Ultimately, I want to see a failure at 23.42. That would be a pretty big deal. EFA, which is the only ETF I have puts on now. This, in spite of the U.S. markets going just apeshit, this pretty much is stalled. We're really no different now than we were back on the 18th. You can see here this line. We've been teasing it, tickling it, but we're just kind of stuck right here below this very clean top. So drum rolling in the background, hasn't broken through, certainly so. And the same can be said for the Eurozone, the EZU, which has its own line here and has just kind of been sitting there and stalled out. Wait for the next thing, which I guess would take the form of the Fed on Wednesday. China, whose puts I bailed on at a pretty severe loss, has not yet broken its trend line. I've still got puts on Baba and JD and Baidu, but I gave up on FXI, which is probably a good sign of the top. But this has to break this trend line to get this thing rocking and rolling. If it does fall, my first intermediate, well, it's not a goal anymore since I have no position, but what I would look for as this important test would be this gap here at 29.54. But the ascent has been just laughable. I mean, just national team written all over it. Just a preposterous rise here. About a 50% lift in a country's stocks in just a few weeks. Silver kind of plays into my whole have commodities topped theme, because they have definitely stalled out here, just as they did back here. And precious metals have been generally very strong, but silver's been underperforming, and I would expect this. And I'll just pause here and say all assets are tied together. These are all going to move up and down at the same time. Precious metals, gold, silver, crypto, equities, bonds, kitty litter, everything. The everything rallies brought everything along with it. And by the way, that whole mass, including the kitty litter, I think will be dragged around by Tesla. So Tesla's key to watch. The semiconductors managed to close a little down on Friday, and it's amazing that was so little because Intel and KLA got killed, but the other semiconductors didn't really care. But unlike the cubes, which have broken above their trend line, this is just at the same level that it was back at the August peak after that 2-month rally. And I'll just say again for the record that even though this lift for the past few weeks has been relatively small, it has felt huge. It has felt far worse than the 2-month slog we went through last summer. I don't know why. Maybe it's because the VIX has collapsed down to 17 on Friday, but it's felt really bad. And the all assets I left out, bonds, those two bonds are worth watching. Haven't exactly been setting the world on fire. They had their big day in the sun, and they peaked here in December, and they're just kind of farting around ever since. But the bear market in bonds, I don't think one could claim is definitively over either. I mentioned oil being weak for a change, down 2% on Friday. A nice start, but again, it's got to complete this right triangle pattern to kind of get rocking and rolling. And if it does, we can fully expect the likes of XLE to give up the ghost. It's hysterical to me that when the Biden took office and et cetera, people probably thought, oh, well, this is the end of the road for big oil. Boy, are those guys screwed. No, actually just the opposite. Big oil's never done better. Lifetime highs for the likes of Chevron. And so your Exxons and your Chevrons, they're just loving life. They're doing great. So yeah, whatever smirk was on people's faces about big oil has been wiped clean, because those guys have just, taken everything they want. So politics doesn't necessarily drive those things. XLF financials, still below this big blob of overhead supply. I've got puts on a few different banks right now. I don't know why I marked this one. It's not particularly interesting. XLU still looks pretty cool from a long-term bearish perspective. We are right near the midline right now. This is a multi-decade chart, very clean. And we have been doing pretty good progress here. If the all assets thing starts to swoon, I think we're going to start moving into the mid 60s on this one. And finally, I'm back to the energy theme. Here's XOP, which is also still above. It's at the moment above its trend line, although it did some little bit of damage here. But what I'm looking for is for this to constitute a barrier to any further price gains. We got to get below this trend line again. Although my position in energy's gotten pretty darn small lately. The only energy stuff I've still got is Schlumberger, which is SLB, Murphy, which is MUR, and geez, I think that might be it. So yeah, not the energy bear I once was. All right, well, I'll end it there. Hope this was helpful, and I hope to God we have a better week next week. Jerome, save us.